Welcome everyone to another 144 and 360 where we explain how to use the Fibonacci retracements with the 144 rules and guidelines and try to get you to believe, as we do, that the Fibonacci retracements are the underlying structure of all markets. Today we're going to take a look at this soybean meal, and the Nasdaq, two totally different markets, but yet still following the same rules, and why we think it is the underlying structure in all markets. We're going to get into a little bit more of the inner moves within the bigger moves, and in this case with the meal, we've gone over this before, where it held 38% contract high and low. That was our long-term swing point after the new high. Same thing again with a new 38. And in this last leg up, because then this becomes the next most important low, hitting a major retracement, and then after the contract low, we run up here and we held 23% of just this low, which sent us up to new highs, as you always look for. Then the next setback after this new high once again held 23%. Now this is where I want to show you a little bit. We'll move this out some just to make it a little clearer. So you're always looking for the combinations of things, but never forgetting the bigger picture, and that is that 38 is still well below, and that's going to be the key retracement that is going to change the trend or not. So in this case, holding 23%, as in our previous video on the 23%, 38, that's an extremely strong market, only being able to hold 23 of the bigger move. And 38 is what changes the trend. You can always go back and listen to that video. We would appreciate it if you would. And here we have, when this one dipped pretty far below, but never closed below it here, the 23% back down to that low. It closed slightly under it the next day, but again, our rules are that it has to have two consecutive closes in the same direction. One, if it's going under it, one lower than the previous one, in order to kind of violate that area. In this case, we got right back above it, but this is what I'm talking about in the smaller area. Now, if we take this retracement here and we go to retrace this back to here, this is the most important low other than this down here, because this is where the big move up came from, its first setback. So then when we go up to here, we look, and what do you have? But not only did it spike under that bigger 23%, but you get the 78.6 retracement. And then the market, initially following the other video we did, 61.8, 78.6. 78.6 should have at least led you back to 78.6 this way, back to this high, which it did, and could be leading to even more, which it did. But usually these are at the bottoms and top extremes of the move, in reverse of what we're seeing right here. But anyway, it holds this 78.6 just to give you extra on top of the 23. Again, this one's more important because it's of a much bigger range. You always got to keep that in mind. Just because it violated 38 of this move here doesn't mean this whole move is over. You have to get yourself back out to the long-term levels. Now we look at this and we go here, and you can't. You're not even getting back to 23% of this whole move here. So we start using again that next low. That's the next most important, and this dip under here comes right to 38.2% of this low on 12/19 and the high on 2/3/23. And again, I mean, even you're holding even tighter levels, which is even stronger sign that even the 23. So then we come in here and we hold. This was this 489.70 major Gann square, nothing to do with the Fibonacci retracements, but is the secondary thing that we use based on price. And in our weekly grain outlook, these are the things that we use, two major factors in determining price and movement in the market. So we hold this here. Now, the next most important level to retrace to is here, and once again, 38.2%, and it kind of joined in with that 489.70. So to know what to look for from here, we'd love to see you become a premium member. You can do that by going to our website. We give weekly updates on the grains, and for what to look for above and below, that's what you got to do. Anybody can be good on the left side of the chart, as we say. It's the right side. Come and see how we do. I think you'll be pleasantly surprised. And now I want to take you into another market, which is totally different, but yet still same rules and same things happening. So let's move this one over here. And now we've got the Nasdaq 100. Okay, so when we did this, we've done this a few updates on this, and what happened here, this 38 back to the 2009 low is what we were coming up from. But you see here, we went up to 23%. We should have made that new low, but remember, look at how big these levels are. Huge to 2009, 2020 lows, two massively standout levels. So again, like we're trying to say, it's always about that, the big levels, to say what really is changing something. So then you look at just even here, let's see if we can get this over. The all-time high was up here. Shrink this down. And you can see that where it just sent us was from this 38 back to the 2009 low was up to 38% back to the all-time high. I mean, right to it. Had a major Gann square there. We told, we send out an occasional letter too, aside from that, for free if you sign up for our newsletter, just to show you how the Fibonacci retracements work and everything. And right now you can see how perfectly that held and turned the market. Now if I squeeze this thing out here, again, we already knew that the market should go down because of the 38.2%. But if we just take this real quickly, I mean, just to show you how tied in all of this stuff is, that again, 78.6 is where this high was, just of this smaller move, giving you another reason to say this market should go down. So I'm just trying to show you how I mean, these things are just happening on every level, whether it's an hourly chart, if it's a daily chart, weekly, it doesn't matter. It's just you can take it down to the most minute level, and that's the beauty of Fibonacci retracements, because they're usable in every minute of every day. They're not a once a month, wait for it to happen kind of thing. They're applicable with our rules and guidelines as to get a greater understanding of what the potential is when some level does hold or if it doesn't. So in this case right now, we're looking for 38 back to that low back here is right in here. We happen to have a major Gann square, 11,942, and just so happen to have the 200-day here. So this is going to be huge for this market. We still have the underlying big numbers below, but we did stop at 38%, which tells us we could still go down to new lows. So if this level here at 38% doesn't hold, the short term turns negative, and we're always looking for 61 point after that, which 61.8, which in this case happens to be 11,455. So watch this area. You can trade below it. And if you get a couple closes under it, in this case, the way these markets move, it could be all in one day. But anyway, you just at least know what the potential is. This area holds. We're looking for new highs and to take out 38. And if that's the case, we would be looking up here to 61.8 in this area of the major Gann square and 61.8. And that's about it. We just hope you are getting a little more understanding in each one of these things. Hopefully we're explaining it a little bit better, or I am. I mean, I know what it is to me, but sometimes it doesn't seem clear to other people. So we'll keep doing these and try and get better at it. We'd appreciate it if you do trade the grains to give us a look and give us a try and sign up to the premium membership. And that would be great. And you can always find us on barchart.com. We post a lot of updates just on all markets, just trying to show how this the markets work based on the Fibonacci retracements. So until our next video, thank you for watching and good trading.